Hi, this is Jim Baldonado, and welcome to the Home Agency Huddle podcast. Today I want to talk to you about APO, added price option, or the different hail policies that we like, and the main one that we really promote is Companion 80. APO is an endorsement that you can add to your existing multi-peril policy. And what APO does, it adds extra dollars to the top of your multi-peril policy. So when you have a multi-peril claim of your guaranteed bushels, you stand to collect some additional dollars. So for example, let's look at multi-peril base price coming in at $5.75 this February for the December contract on corn. At the 75% level, you can add a third more or $1.92. The 80% level, 25% more or $1.44. And at the 85% level, you can add 17.6% or another dollar and a penny. Now, in order to collect, you must have a bushel loss. So for example, if you have a 200 bushel APH at the 75% level, that gives you a guarantee of 150 bushel. Now you take that number times $5.75 plus the $1.92 for APO. So now for each guaranteed bushel below 150 bushel, you stand to collect $7.67 per bushel. Now, the nice thing about APO is if the market goes up, and let's say it goes up to $7.50, and you have a bushel loss, you will collect the $7.50 from your multi-peril policy plus $1.92 for APO for a total of $9.42 per bushel on your lost bushels below your guarantee. The nice thing about APO as well is that even though you may have enterprise units under your underlying multi-peril, APO is always paid on a optional unit basis. So that is a very nice option to have. Over the years, people had come to us with trying to understand which hail policy to write or which one would be best to tie to their multi-peril policy. Over the years, I've developed this spreadsheet that we're showing you here, showing you product all the way from a hail policy that's called basic, that has no deductible and totals out at 90%, or what we like to sell is the Companion 80 that actually totals out at a 25% loss. Because you carry multi-peril on the bottom part of your crop, we see no reason whatsoever to cover that bottom part again. Put your money where you need it, and that's on the top part of your crop. So for example, let's say you have a 10% loss. You just go to this chart and you look at, 10% loss on the left-hand side, and you can look all the way across and see how much you're going to get paid on each policy if you purchased $100 of coverage. So at a 10% loss on a basic policy, you would get $10. You follow it all the way across, at a 10% loss on a Companion 80 policy, you would get $25. And how that Companion 80 policy calculates is you take the 10% loss minus a 5% deductible times a factor of 5, which gives you 25%. So if you bought $100, you would get $25 back. Now let's look at a 25% loss. Well, a basic policy would pay you $25, but you look over to Companion 80, 25% loss minus 5 times 5 is 100%. So you're going to collect $100 there. So now what we do is down at the bottom, we show you the cost per 100. Sure, that basic policy, it's going to be relatively cheap. Even the DDB is even going to be cheaper. But the most expensive policy on this sheet is Companion 80. But if I were to come to you as a producer and show you or just talk to you about all these numbers without showing you, you're not going to buy into that and you're going to say, I don't know, I want to see how that really works. That's why we've developed this sheet years and years ago so that I just show everybody all the options. We have a saying at the home agency, we don't care what you buy, we just want you to buy it from us. So we're going to show you the options and we're going to just let you lead to the product that you want. And I guarantee you, you're going to like, the Companions 65, 70, 75, or 80, but most choose the 75 or 80. There's a product out there that we also sell called Production Hail. Production Hail, we used to sell a lot of it. It's tied to your multi-peril policy to some degree. If you're at the 75% level on the 200 bushels, that would guarantee you 150 bushel. With production hail, you can buy up to 120% of your APH. So 120% of 200 is 240. So we're going to insure from 240 down to 150 where your multi-peril kicks in. The thing I don't like about production hail is the adjuster comes out, adjusts your hail in the middle of June or July, and then you don't know whether you're going to have a claim for sure until after you harvest those bushels. That's why it's called production hail. So like this past year in 2021, we had such good growing conditions, a lot of producers grew themselves out of a claim. So they may be expecting a 20% loss, but after they were done putting fungicide on and extra water and really taking care of that plant, they may have ended up with only a 10 or a 5% loss, which really hurt their bottom line because they didn't collect as much under their crop hail when they thought they had a 20% loss. With companion hail, we're going to come out, we're going to adjust that claim within 2 weeks after the claim, and then you're going to be paid after that within a few days. So you do not have to wait until after harvest. You do not have to wait to see if you outgrew your claim. You get paid right away, and that's how people like to have their crop hail done. So if you have any questions, please give us a call at the home agency. So with me today is Cindy Davis. Cindy works out of our Elwood, Nebraska office as well as the Elma office, and I would like to have Cindy introduce herself.
Thanks, Jim. So my insurance career began in 1999. Back then I was working with Farm Bureau. And in 2002, our family moved up to Elwood, and I was lucky enough to land a job with the home agency, and I've been there ever since. I began in Elwood with property and casualty insurance, but I quickly transitioned to the crop insurance and just found that's what I love to do. A couple years ago, I took on some more management duties at the Elwood office. And I say management, but I kind of take that fairly lightly, yet grateful, because Jim has an excellent crew up there, and they really know what they're doing. So it's an awesome place to work. I have 3 beautiful children and expecting my first grandchild in a couple months, so I'm super excited about that. So Jim, I was looking back at our employee records not long ago, and for our employees, I think we've had an average of a 10-year stay. And if you take out what we've hired in the last 2 years, plus our P&C manager, who was there for 35 years and just retired, I'd say that's pretty good.
I've been there since 1986. I actually started February 1st, 1986. And later that week, on Friday, my wife Sherry gave birth to twin girls, Morgan and Megan. And so we had a daughter, Sarah, already at home. And that was a big week. First of all, starting a new job, having twins that week. And then what I probably remember most is the $700 salary I was earning per month. I just can't imagine, how we got by back in those days. But you know what? I remember some of the funnest times we ever had were back in those days. And so that started me in the crop insurance business. And later on that month, we had a field rep from a crop insurance company stop by. His name was Marvin Rhodes. He was a local Elwood boy, and he wanted us to write crop insurance for his Uncle Rick. Uncle Rick was the owner and president of American Agri-Insurance back then, and Marvin assured us that if I would learn how to sell crop insurance, he felt I would be very successful. Well, over the next 10 years, we quickly became one of the largest writers of crop insurance in the nation for American Agri-Insurance. Why did that happen, or better yet, how did it happen? We learned that policy inside and out, the multi-peril policy. American Agri-Insurance was very good at providing us agents with different types of products to attach to or endorsements to their multi-peril policy, whether they were market value protection or MVP, a VIP, value increase protection, or a product called CRC Plus. These were just endorsements that we could add to their multi-peril policy that made those policies even better. What we did is that we got a hold of those policies as quickly as we could from the company. We learned how they worked. We took them to the field, showed them to our producers, and let them tell us whether they liked them or not. In most cases, they did. We ran with them. Back then, we did a lot of radio, and as we still do. And word got out that there were new products on the block, and that's how we built our business there in Elwood. And it's kind of funny, you look at our clientele out of Elwood, over 50% of our customers come in excess of 100 miles away. That's a big number because of radio, and as you know, also because our customers tell their neighbors at the coffee shop, what we do that's different than most, and that's how we have built our business over the years.
So it's been a few years.
It has been a few years.
Yes, good years though.
That they have.
And we still get to see Marvin in the office.
Exactly.
So that's great. Jim, I've heard you tell producers for years that federal crop insurance is the same no matter who you purchase it from. I'll let you finish out that subject and maybe touch briefly on the history of the crop insurance.
Well, crop insurance has been around clear back since the 1930s. It started with the Great Depression and the Dust Bowl, and it helped some of the producers recover from that. And then crop insurance remained as an experiment basically until 1980. In 1980, it expanded to more crops and to more parts of the country to replace some of the ad hoc federal disaster payments that the government was paying out. In 1980, the government said that they were going to subsidize crop insurance on the 65% level at 30%. But in 1988, we had a major drought. We had another one in 89. We had a third one in 1992. And then an extremely wet and cool growing condition in 1993, which called for yet another ad hoc disaster. So in 1994, the Federal Crop Insurance Reform Act was started, and in 1994, it made crop insurance mandatory for farms to be eligible for certain farm programs. So with that, there's been a lot of changes. Back in the early days, it was a yield protection only, but now it's a revenue protection policy, and so things have changed a lot.
You say change, and it's still changing every year. It seems like we get or have to learn something new with crop insurance every year. And we kind of pride ourselves on that, making sure that we're on top of what's coming out, what's new, so we can pass that along to the producer. So how is the home agency different when it comes to sales and service?
Well, one thing that we do is, I've said this before, we really don't care what that producer buys. All we care about is that he buys it from us. And so we want to show him all of the options. We're not just going to come out to the farm and say, you need to buy this. We have a lot of people stop in and say, I was told with Multi-peril, you want to buy the highest subsidy that there is, or the level that has the highest subsidy. Well, I don't buy into that. And I show them that, and I'll have this on the screen here. You can look at the 70% level. It has a 59% subsidy. Well, yeah, that 59% sounds good, which means the government is paying 59% of your premium. But if you look at this, the gross premium, now this is for Gosper County where we live on 225 bushel APH, the gross premium is $44.16. 59% of that is $26.05, which is the government pays that part. And then your premium as the producer, it's $18.11. Now this is all on optional units. Now you move clear over to the right-hand side, the subsidy is only 38%. But now your gross premium is $106. The government's paying $40 of your premium, and so you now pay $66. Now, we look at that a number of different ways. People where we live buy a lot of hail insurance, and we look at what the cost per hundred is for multi-peril, which is not just hail or wind, it's any act of God. And, in this particular case, that's going to be about a 4 to 6% rate. When you go to buy hail insurance where we live, that's a 20% rate. And so what you need to do is you need to load up on your multi-peril. That's where the government's paying part of that premium, and then buy less on hail. So you have a combination of multi-peril on the bottom and your hail on top. And so, again, we show the producer all of the options. We don't care what they buy, like I said. We want to make sure that they're comfortable with what they're buying, because I've learned a long time ago, if you try to force feed something to someone and it's at the end, it's not what they wanted, that's not a good thing. And so we want the producer to buy exactly what they want. And so the only way to do that is to show them all the options.
Right. And we like to sit down with them and explain that. And especially this year, producers are going to need more coverage and prices are going to be up, premiums are going to be up. So I think it's important that we get in front of them and let them know.
And, you know, I tell people we are not a mail order catalog. You are not going to call us and we're going to send you stuff in the mail and have you do the work for us. We want to be on the farm, on the ranch, knowing what's going on. You know, that's very important to us. You know, yes, we may be 100, 200, or 300 miles away, but we are going to come and see you. We're going to sit down at your kitchen table, and we're going to do that probably 2 or 3 times a year. And so it's funny to have people call us and say, well, shoot, you know, I'm only about 15 miles away from my agent. He doesn't do that. Well, we do. And we're going to continue to do that. And it's very important that we do that.
We do. We put a lot of miles on, that's for sure.
That's true. You know, Cindy, what I do is the easy part. You know, I love to sell. I can sell anything to anyone. But the real nuts and bolts comes in building that multi-peril policy with the right options or endorsements that producer needs. And that's where you and your staff comes into play, because I need all the help I can get to build that policy correctly. And yes, I can do it, but you people really know the ins and outs of it, and you're always showing us better ways to make that policy better. So can you elaborate a little bit more to that?
Sure. Yep. You're right. A producer's coverage mainly breaks down to their APH. And a quick disclaimer here, we're going to be throwing out a lot of acronyms. The crop insurance industry seems to thrive on them, so I'll do my best to explain them all, but you'll hear quite a few. So APH, actual production history, that is on a unit basis, the producer's prior history and what they've produced each year. That's what their coverage is based on. So we want to make sure we help them get that database as high as we can and to keep it there. And the best way to do that is to help them look at these options. So I'm going to go over a couple of those. Another quick disclaimer, though, not all of these options are available for every crop in every county. The best advice I could give you would be to call your home agency agent. And the first option we're going to talk a little bit about, Jim, is YA. That's yield adjustment. And what that option allows producers to do is to substitute 60% of a county T yield in years that they may have had a bad loss. County T yields is what RMA comes up with per county, per crop. RMA is the risk management agency. They are the ones that oversee the crop insurance program. So 60% of the county T yield can be substituted in your database if you have a big loss. That just helps to mitigate those catastrophic years and keep your database up there where it should be. The next option is going to be YC, and that's yield cup. This option, again, is used in years where you might have had a bad loss. And what the option does is it does not allow your actual production history to drop more than 10% per year. So that keeps your coverage up there, your APH up there where it should be. It's kind of funny, YC used to be part of the common policy until a couple years back, RMA made it an election. So that's just another election that you can talk to your agent about.
I've noticed, a lot of times when I go out and I'm working with a producer and they hand me their APHs and I bring them back and we're looking at them, will notice that they don't have some of these options, and their APHs are 10 to 15 bushel lower than what they should be, and maybe even some cases more. And, when we show them why they need these options, and all of a sudden their APH rises by 15 bushel, that's a win for them. I mean, they know that they made the right choice on moving to the home agency, but that's very important to I know you and your staff and we at the home agency. A lot of people don't spend a lot of time on options or endorsements. They may just throw them on, and in some cases they cost a little bit, but if you don't need them, why have them? But on the other hand, there's a lot of options that you do need, and they need to be on there. And so it's important that that we at the home agency have staff like you that really understands these, so that we can really go through them with a fine-tooth comb to make the best possible policy that we can.
Exactly. Yep. And you mentioned staff. I'm just going to throw something out there, but our girls that work back in the crop department are awesome. They look these policies over. They compare when we have companions, make sure that the databases are where they're supposed to be. I'll get into it a little later, but some of the options, if you even put them on a policy, they don't invoke on the database if you have other options on it. So that's kind of confusing, but I'll go into now the next option we're going to talk about is YE, and that's yield exclusion. This has come out, I believe, with the 14 Farm Bill, but it's another popular option, especially for dryland farmers. So YE, when elected, elects a producer to actually remove an actual yield from their database. And we know with the dryland producers, there's going to be a lot of them. In those drought years you talked about, Jim, we're seeing some databases still going back that far. And to be eligible for YE, RMA has to make that crop year eligible. And how it becomes eligible is they look at the last 10 crop years, they average a county yield, not a producer yield, but a county yield, and then they see if the current crop year is 50% below that average. And if it is, that crop could be eligible to completely take out of your database, which could make a big difference on your APH and your coverage. So that option is a real popular one. I think the last option I'll talk about today is called Trend Adjusted APH, and another acronym for it is TA. So hopefully that's one of the last I'll throw out today, but I can't guarantee it. This option adjusts yields in APH databases basically to reflect the increases that have come over the years. So if you're a corn and soybean rotation producer by chance, your database could go back 20 years. And the further the database goes back, the more trend will help and build up that database, provide more coverage. And if trend is available in your county, it's really something that you want to look at, especially sit down with your agent. The factors on trend are based on what RMA puts out there in the actuarials. So they're different for every county, for every crop, and even by practice, by irrigation practice. So it's different. There's so many options out there.
Well, I can remember when that trend adjustment came out, what the producer did 20 years ago, as you were saying, if you're in a corn soybean rotation, the herbicides, the fungicides, whatever, their planting practices, everything was different 20 years ago.
Right. And
now, 20 years later, they'll go back and look at those yields 20 years ago, and they'll put a factor on them, sometimes 120, 130%, to get those yields up there more in line with what we're doing now. And that was a big deal. And we're still surprised. Sometimes we'll run into policies that other agents have not added that endorsement. And when we do it and it picks up their APH by 10 or 20%, that's a big deal. And again, that's a a compliment to you and your staff for picking those out, because it really helps the producer in the long run.
Definitely does, yes. And I'll say, as an example, we've seen some policies that don't have trend on it. And when we put that option on for, let's say, an irrigated database, I've seen some of those yields jump 10, 15 bushels, which is going to be huge for them, just adding that much more coverage. So now for the inevitable though, with these options, of course, there's a cost. All of them will come with a cost, not per se a set rate, because none of them actually have a set rate in the actuarials. But where you're going to find the cost is in your higher premium, your higher coverage. And the span that is between your approved APH history and your actual history being just straight, what did you produce? Your approved history has all the options on it. So the larger that span, the more premium you're going to pay for that coverage. And those are going to be the 4 most common options that we see at THA. They aren't by any means all of them. There are a ton of them out there. So our goal, and the gals at the office, everybody on the crop side, our goal is to just help increase that producer's coverage, get him the right coverage or the right fit for his agency or for his operation. And that's what the home agency agents strive to do.
Well, and another option that neither one of us have talked about, and that's one of the first ones that we should decide or have the producer tell us what he wants to do, is do I want optional units or enterprise units?
Correct.
You know, an optional unit, and I'll use irrigated corn for an example. Let's say we have 10 pivots in 10 different sections. You would have 10 optional units. And so if you have 150 bushel guarantee on that pivot and a hailstorm comes through and wipes out one of those pivots, you will be paid on that one pivot versus the other 9 units did not have a claim. On the other hand, enterprise units, what you have with an enterprise units, and again, if this is all irrigated corn in 10 different sections, you have one great big cornfield. And so if a hailstorm comes through, wipes out 3 of those pivots, but the other 7 have good growing conditions and they grow enough bushels to offset the 3 fields that you had a loss in, you may not have a claim. And so enterprise units are substantially less. My guess is in some cases are going to be probably 50% less than an optional unit, but you also need to know what that risk is. Now, I know a lot of insureds, especially in Nebraska where hail and wind is our peril, you know, they like optional units because if they have a loss on that one pivot, they want to get paid on it because we know, you know, we're going to have hail, we're going to have wind, we just don't know how much.
Exactly.
And so the further east you go, you know, in Nebraska, you know, wind is more of a peril. But again, they like optional units. You get into dry land areas, Iowa, a lot of people do enterprise because when you have a drought, it's going to cover a big area. Mm-hmm. And so, you know, the first thing we got to look at, what's the difference in premium between optional and enterprise, and decide, you know, what way you want to go. My suggestion is if you're not going to buy any hail or wind, you definitely want to go with optional units. Now, if you're going to come back with hail and wind, you can look at enterprise and decide how you want to go. But that's something that we really need to talk about.
Right. Yep. That should be done first, before we talk about options or endorsements. And I am going to talk about a couple endorsements now. But I was just going to mention, Jim, when you were talking about enterprise, a couple years back, I believe they started and gave us the option, or the producer the option, of electing enterprise units by practice now. And you can elect different coverage levels by practice. So that really gives the producer some more options in his unit structure.
So, Cindy, with that said, can I have enterprise on my irrigated corn and optional units on my dry land?
Yep, and we see that a lot.
And then I can have, because I think my dry land may burn up, I could have higher levels of coverage on my dry land and maybe have 5 or 10% less level of coverage on my irrigated.
Right. Yep. And they've made it. RMA is really that was really a nice change to come out for the producers.
Well, and it was, because I can remember when people would choose Enterprise, 10 years ago, they threw all the irrigated and the dry land together, and they could have 400 acres of dry land burn up and the irrigated do just fine and not have a claim.
Right.
So by being able to split them out now, it's made a big difference.
Correct. Yes. So a couple of endorsements that we talk about on the policy, and I lied, there are a few more acronyms. So BFR, Beginning Farmer Rancher, and VFR, which is Veteran Farmer and Rancher. The 2014 and the 2018 Farm Bill brought these about as a way to help new farmers get started, get off the ground, get their databases built. And really, there are a couple just really great endorsements if you qualify. So a beginning farmer rancher and a veteran farmer rancher, to be eligible, they cannot have had an insurable interest anywhere in the U.S. for any crops or livestock for more than 5 years. That's the first basic eligibility rule they have to get through. There are some exclusions. If somebody's under 18, if they're going to college, or if they're in the active duties in the military, those years can be excluded. The benefits, and these are nice, the benefits if you qualify for one of these two programs, first of all, you're exempt to all the admin fees that RMA or your AIP is going to throw at you. The big one, you get an additional 10% or 10 percentage points, of subsidy, which that is huge. And if you have all of your 5 years left to use for this benefit, you get that all 5 years. You get those additional 10 points on your subsidies. Another benefit is, we talked about YA a little bit ago, one of the options, yield adjustment. Normally, for a normal producer, he gets 60% of the county yield. If you qualify for BFR or VFR, they are going to get 80% of the county yield in a down year. So that really helps to build their databases as well. The other benefit for these two programs is they have the possibility of using somebody else's production history on that ground. So they really like that. There is one other way that you could be eligible for VFR, that's Veteran Farmer and Rancher, and that is if you have first obtained your veteran status within the last 5 years. So if they're just coming out, they can qualify that way, or they can qualify by not having 5 years of an interest in the crop or livestock. So those two programs, we've really seen a lot more of that coming now with some new farmers, some younger farmers getting started, and these benefits are awesome for them.
A couple other, I don't know if we want to call them benefits or options that a producer can buy, are SCO and ECO. You want to touch on those, and then I'll tell you what I think about them when you're done.
Yes. I think I already know what you think about them, but I will. So these also have been out for a few years. SCO is supplemental coverage option. And basically it takes from the producer's level of coverage, takes you up to 86% coverage. However, it's on an area basis or a county basis. It's not personalized yields or revenue. It has to do with the county, what the county performs. So basically, this SCO pays when the county average yield or revenue falls below that 86%. SCO has a 65% subsidy rate, which is pretty nice. These two, SCO and ECO, are two that are actually federally subsidized as well. ECO, that's called enhanced coverage option, and there's a couple different levels that you can choose with them. You can choose to insure from 86, where SCO leaves off, up to 90%, or you could choose to insure from 86 up to 95. So that's a lot of coverage. ECO comes also with a subsidy. It's either 44 or 51%, depending on your underlying multi-peril coverage. One thing to mention with SCO, you cannot also elect the ARC farm program at your FSA. So that's probably a whole nother podcast to go over
That
for
it is.
those. Yeah.
That it is.
With ECO, there are no limitations on which farm program you pick at FSA. The one big caveat with both of these programs, well, two, I guess, they are county-based, and producers won't receive their payments until way into the following year.
And that's where I come from. You know, we talked earlier on some of our podcasts about production hail and not getting paid until after you harvest. Well, both of these plans, you don't know if you're going to have a county-wide claim until next June or July. And so there's no way to bank on whether you're going to get a payment or not. And so I don't know of a lot of producers that really want to go that far out to see whether they're going to have a claim. Now, you know, where we live, we're predominantly irrigated. You know, for us to have that bad of a yield, it would be very hard. Now, you go down into Kansas, you go over to Iowa, you know, there's probably places that these will work, but I know there's a lot of places that will not. And in my travels, I have yet to run into anyone that has purchased these, but maybe I'm just not in the right areas. You know, so there are some that it probably does work. But for us, where we live, it's not a good product for us that I see.
Yep. They can, sure enough, spend that premium on some hail and wind coverage or APO for sure. So those are all the options and endorsements I have for today. I'll just add quick that each of them have their own rules. They have their own eligibility. Some of them have exceptions. And I didn't want to bore you with all the details. So again, my suggestion is to just get in with your agent, sit down, let them look at your policy or build your policy for you, because I know they'll do a great job.
And with these types of products that we're talking about, all these endorsements, all these options, you know, we talked about APO, we talked about companion hail. You know, a lot of these things, the multi-peril for sure, and the APO has to be purchased prior to the 15th of March.
Correct.
But our producers, when they sit down with us, they want to just get everything done all at one time. They don't want to be bothered in May when they're trying to get stuff in the ground, trying to figure out what hail policy they want. You know, once we get a producer in-house, they like what they see, and 95% of the time they make no changes from year 1 to year 5. But, you know, if we see a change that needs to be made, we're definitely going to show it to them. Whether they want to make that change or not, that's strictly up to them. But, you know, we try to get all of the policies written, the renewals done by the 15th of March, which we have to do, plus any endorsements or any other policy, APO, companion hail, get that all done. So now they're worry-free. They just have to go out and do what they like to do best, and that's for them.
Exactly.
Take Bissell's for an example. You know, this is a large company, or this is a large farm, south of Red Oak, Iowa. They're 300 miles away. Mm-hmm. They love to do business with Cindy. You know, she knows that, you know, the insured knows that Cindy is going to take care of her. She knows that each field is getting the maximum amount of APH that they've got coming. So I guess that would be something, Cindy. I mean, that's not what I'm saying. That's what you need to tell people, that this is what they should expect from you, or really any of us at the home agency.
Right. I truly love, I love it when the producers come in the office, but when I get to go out of the office and go see them, that's what I love to do. And like we talked before, we will look at that policy. We'll get into the nuts and bolts of what they had, what we can offer them, what might be right for their operation. And, that party that you were explaining, when you get producers like that and you just work together to do the best for them, they end up as friends.
Exactly.
Yeah. So it's nice to be able to get out and meet new people, make new friends, help them with their risk management. The one thing that does come to mind is when you get a new producer and you've worked with them for a couple years, it's just kind of fun when they call and say, hey, the Northeast Quarter or Miller Place or whichever farm it is, you're like, okay, yeah, I know where that's at. I know what that is. So that's what we're trying to get to, knowing their operation in and out, how we should for crop insurance, and just providing them all the options. They might not want them. They might not need them all. They might not agree with you sometimes, but still you're putting it out there and giving them everything you got. So,
well, and I've had people tell me over the years that, boy, you guys are not the cheapest place to buy crop insurance. No, we're not. We're not that person. We want to keep you around for a long, long time. And if we sell you a product cheaper just because that's the only way we're going to get your business, we don't need your business. We don't want to have hurt friendships. We're going to sell you the products that are the best for you. We're going to show you those. There's instances where I've actually had people sign off that said, Jim showed me this, and I'm just not going to buy it, but I'll have them sign a note that makes sure that they were explained to them. And we actually have a form that's called Things to Remember that goes through all of these different options. They check off probably 10 different things that we talked about, so that we did talk about them. You chose not to buy them, or you chose to buy them. And, we are not the cheapest place to buy, but you know what? Our retention rate is in the high 90s, probably 99%. So, they may pay more for doing business with the home agency, but they get what they pay for. And I will go back and say on multi-peril, if somebody tries to tell you that their multi-peril is cheaper or better than anybody else's, that is not true. The government sets the rates. They set the premiums, they set everything. And so what one guy can offer is going to be the same thing that the other guy can offer, and it's going to be the same price. Now, sure, they can tweak it a little bit. Maybe they don't have some of the endorsements that you have on, so that might make theirs cheaper. But on the other hand, they may be short 15 bushel an acre on their APH because they don't have those options.
Correct.
So it's very important that when you're comparing, make sure you're comparing exactly apples for apples, because a lot of times that isn't the case. And, I know the home agency, for being in business for 36 years and doing this, we're going to take care of our customers.
Right. Yep. And the one thing that I always, if somebody calls and says that, or if something is way left or right and does not look right, you always got to be a little leery. If something looks too good to be true, it might be. Multi-peril is going to be the same if you are comparing apples to apples. But I was just thinking about, Jim, and you might have talked about this in your Hail podcast, but, we had a couple of years back some producers leave because they thought they were getting this great deal on HPP or a great rate, or I don't recall for sure what it was. But, yeah, and it turns out that, no, it really wasn't. And so, yeah, you just they want to watch out and make sure they're getting what they think they're getting.
And, you always hate to lose someone. And, but, I think if it's the same ones, I think they were back the next year, because what they bought was not what they thought they were getting. And so, again, Sit down with us, look at all of the options. Like I said earlier, we don't care what you buy. All we care is you buy it from us. But we're darn sure going to show you all of the options that are out there. And then you make the choice of which one you want to buy.
Right.
We at the home agency, we pride ourselves on giving the best possible service that we possibly can. Whether that's meeting everybody on the farm that may be 200 or 300 miles away, with hail, something that we can do with hail, but we can't do with multi-peril. That adjuster knows that when there's a hail claim and we submit a hail claim for a producer, he knows that they must call us and they must give us the opportunity to go on that hail claim with the insured and the adjuster. Not that we're going to do any adjustment. We can't do that. But we feel that we sold that policy to that producer. And if there's going to be any question on how that policy is going to pay, we want to be in the field explaining that at the time of the adjustment. We're not going to have the farmer get into a discussion with the adjuster, and then the adjuster leaves, the farmer goes home, I get 2 phone calls, both of them are mad because, they didn't get along. We're not going to do that. We're going to be in the field so that if there's any questions whatsoever, those questions can be answered, and that is on hail insurance only. Now, when it comes to finalizing the claim, we're always out there in the spring with our hand out wanting people to buy insurance from us. Well, when it comes claim time and there's a check to be delivered, we're darn sure going to hand deliver that check and hand it to that producer, shake hands with him and say, thank you for your business. Because again, like I said, if it wasn't for the farmers and ranchers that we do business with in our small community of Elwood, we would not have the business that we have. And so it's very important for us to thank that producer every opportunity that we can.
Exactly. And I'll just add real quick, those checks that all come in, everybody checks them 2 or 3 times before they go out and make sure they're right.
And in fact, we have a program that once the adjuster gives us those losses, whether they're under multi-peril or hail, we put all the numbers in the program. And so way before the check gets there, we know what we're expecting the check to be. So that way, if it comes in and we're off, a few cents because of rounding, that's one thing. But if we're off $200 or $300, we got to figure out where the error was made. And so I know a lot of people, agents, good friends of mine, they get a check in the mail, they just take it out of one envelope, stick it in another, send it off to the insured, and they just assume it's right.
Right.
And we will not do that. We're going to go through it to make sure we know it's right, and we're going to bring that to you and put it in your hand and say thank you.
Yep.
Remember, your multi-peril has to be renewed by the 15th of March. But with that, if you're looking at APO, that must be purchased by the 15th of March as well. And they really go hand in hand. So if your multi-peril is not with us, you may want to consider writing your multi-peril with us so that you can add APO to it. Also, hail can be written anytime prior to it hailing, but a lot of our insureds want to do it all at the same time, February and in March prior to the 15th. So that way they're done. They're done with it. They can go out and do what they do best, and that's farm. And so the 15th of March is a big deadline. So make sure you get a hold of us so that we can take a look at your multi-peril, look at options like APO and companion hail at the same time, and try to put the best package we possibly can together for you.